Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Hey guys, welcome to the show. There's so much that has been happening. So, this week we thought we're going to take all the top headlines and dissect them one by one. The biggest news story that came in this week was, of course, the India US trade deal. It was a huge relief for the market. Vikas Khemani is here, as always, to talk to me about everything that's relevant today and how you should approach it. Vikas, thank you for being here.
Oh, pleasure. It's always good to chat with you.
And there's so much to chat about, right?
Yes.
Every day you wake up and there's a new headline.
Correct. Absolutely.
So on this US trade deal, I want to start with that. Market went up, बहुत कुछ हुआ, everyone got super excited, but now थोड़ा सा it's settling down. How would you actually read into it from a slightly longer term view?
No, so I think if you see last 1 year, especially post Trump coming to the power, especially in April, I think the first expectation was that India will be the most advantageous when the tariff announcement happened before the rates came out, right? And markets were kind of okay, and suddenly we saw very adverse move, tariff on India, and ever since markets have been topsy-turvy. Lot of while even if when everybody said that India export to US is very limited and it's not going to be a very big economical problem, despite that markets were nervous, and because we could see a lot of tension in US and India relationship. So it was also markets were seeing it as a bigger picture, bigger problem as well. I think with this deal, one thing is very clear, that India-US relationship is back on track in some sense, right? For whatever it's worth. So to that extent, it puts that very big question mark, back, that India is back in the play. And meanwhile, this whole crisis has also helped India in many ways. Think about it. Your EU FTA, which was pending, stuck for 18 years, has got done because you had suddenly accelerated sense of urgency, right? And that kind of got done. You got it done with New Zealand, you got it done with UK. So I think while this was happening, those things got accelerated. So today, fast forward, what started as a crisis today has ended up being a good opportunity. You have FTAs with pretty much most of the, world. EU is in fact a bigger market than US if you take this as a block, right? Which is great for us, right? Now I am sure US FTA is yet to be done, but by and large, at least adversity is behind, and there's a guidance that it will get done in next, couple of quarters, or as much time it takes, but it will be done. Every FTA takes time because there are a lot of pull and pushes happen. UK FTA took so long, almost I think 18 months to 2 years, if I remember correctly. So these are big issues, but thing is at least that adverse environment is over, and that to that extent I think is good. So I think India did a lot of good things in this bad period, which is I think a good news according to me.
So the last time we met was in Diwali. And you were very bullish at that time. You said, the worst could be over and, India's picking up, earnings are picking up. But the truth is, Vikas, that this market has done nothing for investors. If you look at 2-3 years time frame, mid caps, small caps, mutual funds, anything you pick, right? Barely single digit growth. So with what conviction, how are you convinced that this market will recover? Because is there like a real deep-rooted problem that we are unable to see because of our confirmation bias? And what do you see as the way forward?
So I think first of all, I think markets peaked in September 24. So it's I think about 1.5 years, little less than 1.5 years period where markets have not done well, right? And again, if you remember our conversation around Diwali, where I said that a lot of positive things are happening at the economic level, right? At the economy level, which is positive in right direction. But these some of the global concerns which are playing out. If you see September 24 when market peaked out, uh, 6 months before, our previous RBI governor had kind of, in order to defend rupee, created a lot of liquidity squeeze in the system, which got coincided with the general election. So there was a huge liquidity squeeze in the system, which impacted corporate earnings with 2 quarters lag. So by the time December 24 came, we had a peak market and earning comes slow down, which kind of created a bit of so you had high valuation and slow down in earning, which is obviously right recipe for correction. And RBI new governor came, and he removed that liquidity deficit. He cut interest rates, right? But by then, Pahalgam happened, tariff happened. So you had 6 months period, lot of other uncertainties which were not economic. But the good news is that while those uncertainties were coming, a lot of good things were happening. We came, GST cuts came, which was a very big booster. So you had both monetary stimulus and fiscal stimulus at play, right? And those both, when it play, they act with a 1 or 2 quarters lag. So if you see, September quarterly earning was good. December quarterly earnings, so far, whatever earnings have come out, they are good. So earnings have been improving. So you are seeing markets not going away and earnings improving. Small and mid caps have corrected a lot. So you are sitting in that backdrop and context. Now, there could be a disconnect of 6 months, 9 months between the economy and markets. It's always the case, right? So I maintain the same thing when I said in around Diwali also, that by and large, most of the downside is behind. Upside, when it comes, we will see. So I think we haven't fallen post Diwali also. I think we've been kind of in a range bound. So markets have been consolidating. And as first good news came, markets have kind of looked up. So I feel, this much 25 was very much similar to 22, where 21 was a great year, 22 started in a big bang, Ukraine war happened, and whole year was a pessimism year, right? But September onwards, market started doing well. I remember writing a note that point in time that build this vintage will help out, right? Will be very good. Now 22 vintage today also is very good. So same thing, I would feel that this current vintage will be a very good vintage from a risk reward point of view. See, nobody can tell you whether market will go up and down in next 3 months, 6 months. We all are in assigning probability and assigning risk reward to a particular situation. To me, it looks like that we are in a good risk reward from here, and good probability of market doing well from here, right? Like in 2022, small and mid caps were down about 5-6%. And if you see, every time since post global financial crisis, whenever small and mid caps are down, next couple of years it ends up doing well. So you have this 2-3 year cycle when markets don't do well and do well. So I guess see, in that context, you have had all the positive economic development happening, earnings are picking up, markets corrected, currency depreciated. So I'm saying FI flows all time sort of low, whatever situation. So I'm saying you have seen pretty much lot of negativity behind you. Now, can it take another 3 more months? Answer is I don't know. Possibly.
But the problem in this is that there's an opportunity cost. No, for last people who have been in this market for 2-3 years have seen no returns, while other asset classes are booming. Whether it's silver, whether it's gold, whether it's any others. If you look at cryptocurrency had a big phase as well. So how do you deal with this opportunity cost? I take your point that if you are a equity bull for 15-20 years, you have the patience to stay. But for the new investors, there is a lot of FOMO.
No, I understand. See, again, how do you look at opportunity cost? If I look at opportunity cost every month, I'll have a different approach. If I look at opportunity cost in the block of a year, I will have a different approach. If I look at opportunity cost in a block of 5 years, I'll have a different approach, right? In my opinion, any serious investor, looks at opportunity cost in a block of 5-10 years, right? Nobody can, tell you in this year which asset class will do better and all. And based on that, one can kind of tweak allocations, right? But generally speaking, of course, 2024 was a very extremely bullish environment. I think a lot of people sounded caution. If you see our January 25 note to investors, we said this year will be year of, volatility and, difficult year. So most people were facing this difficult year, but does not mean that, year of no return also, in my opinion, equity is a good year. Because there will be periods when, but nobody can tell you now how much 26 will be. Like, think about it. 23 was a great year, but there was no reason for anybody to believe in September 22 that 23 will be a great year. It turned out to be a great year because factors, when they change overnight. Why did market go up yesterday 2.5%? How could one have planned that US deal will get announced, one night? Nobody can time that. So triggers come very quickly. All you have to see whether probability and risk rewards are in favor or not. I do believe currently we have that. And especially when everybody is, today if you speak to 10 people, 8 are disappointed or probably not negative. And that tells you the market sentiment, right? Today, I think the mood has moved from complete optimism to pessimism, right? There are more believers to less believers. Now, we all know from experience that that's the best time to allocate more capital to invest into it. Does not mean that you will make money 3 months, 6 months, but people who understand equities from long-term perspective, they know they'll come out well on the other side. And at the end of it, you start money gets made. I always said that, buying good companies, at the end of it, then that work is never compromised. That work you have to do. I believe that froth is over. Large part of the froth is over. Fundamentals have improved. then there's no point, though no merit in waiting for timing at this point in time. Is my view.
Okay, got that. So you're saying froth is over, fundamentals have improved. But once again, this whole thing about allocating assets, right? I mean, when we spoke in Diwali, I had asked this question about gold. We never spoke about silver. The funny part is that everyone missed the silver rally, let's be honest. We spoke about gold. Most people sitting on that table said they are cautious. From there, gold went up 50% or whatever, 40-50%. Now, I'm just trying to understand, like, if experts, if people like you who manage so much money cannot figure out this rally in gold or cannot, then how does a layman do it? I mean, it's so hard, right?
It is not possible. And today I can tell you again, yesterday my brother was here and he was talking to me. He said, today on tea conversation to social conversation to business conversation, everybody talking about silver and gold. So that tells you the kind of euphoria which has happened across. So today, now should you look at asset class when nobody is looking at, or should you look at asset class when everybody is looking at it? That tells you that, right? Today everybody is predicting great time for silver and gold for next 5 years. To my mind, that's a euphoria. I think it may not do as well that. And today nobody wants to talk to equity, and we all know that. From experience we know that. It's just that everybody wants to still time it out. We all know that this will reverse, like how it reversed. And look, timing is very hard, in my opinion. Timing is very hard on any asset class for that
No,
matter.
timing, I agree. But I'd asked this question, I remember, to S. Naren also, that what if we are in a 10-12 year upcycle in silver? Because things have changed, right? 10 years ago, we didn't have these EVs, we didn't have renewables, we didn't have data centers. Now, silver is needed in everything. So, has the use case changed so much that we are in a structural upturn for maybe a decade? How do you know?
Possible. The only thing which countered, and possibly, I don't know, I'm not a silver expert, so I can't, tell you, but possibly one thing we all miss. If you remember, there was a time when the crude oil went to $140, and I remember reading a Goldman report that crude will go to $200, and their argument that no supplies are there, in the world, all the possible reserves are kind of exhausted, and how will it come, and it'll go to $200. It never went to $200. Today at $60, there's enough and more supply, right? So the point I'm trying to tell you is that these kind of euphoric moments come. When the euphoria comes, we make this argument: excess demand, no supply. But the fact is that pricing, high price also brings a lot of supplies. New supplies come, marginal supplies become viable. A lot of other alternatives start coming about it, because price also brings this kind of high cost, also brings innovation. So I don't believe that this kind of sharp rises can keep on sustaining, and there will be always alternatives, right? I don't know what they would be. Keep that in mind is all I would say. I would not put my money, I would say, and I may be wrong. Look.
No, that's fine. It's fair. I mean, all of us have been in that position, right? Where everybody's, the other day I was talking to someone who said, and he has had like 20-25 years of experience in equity markets. And he's like, on my family WhatsApp group, people keep saying, you are head of research, you have been in the market. How did you miss the silver rally? We are better than you. So, I mean, it's a weird place because things are getting disrupted overnight.
Yeah, correct. So I look again. It's done well, no doubt about it. And there was a situation, but again, gold and silver, if you see history, they do well in spurts. There will be 2 year period they will do well, and then 4, 5, 6 years they will not do. We have seen that historically also. If you just draw a chart, and again, if you take a 10-year block, I believe that equity has delivered far, far better return than any other asset class, right? Indian equities have also delivered far, far better return in dollar terms, just as much as close to US, or slightly, around that number. So I think India has done well, and again, we are at such a great, inflection point of our economic growth, where we are the leading growth. There are so many opportunities. So at least I am very clear. I don't want to distract myself. I want to stick to the core, and we have compounded very well, and this is one of the greatest compounding cycle in our lives, according to me, and I continue to believe that. And I have put all my effort, eggs in, and then that basket.
So you don't think that your confirmation bias is preventing you from making money in other asset classes? I mean, I have the same problem because I'm also very invested in equities, right? And I feel like I'm wearing these rose-tinted glasses, but the world outside is very different. It's changing rapidly. I mean, all of us don't invest in Bitcoin, for example. But yesterday I had a conversation with someone who's in the cryptocurrency space, who said crypto is the new digital gold. And large economies worldwide, large central banks, BlackRock, Larry Fink of BlackRock, who was he used to discourage Bitcoin 5-6 years ago, has completely changed his stance. So don't you think we need to, at some point, sort of wake up to the new world order?
See, you tried. I mean, I have tried many times to, and it does not. So my only point is possibility is there, right? The thing is that do you understand that? At least as much as I try to at least I still don't understand how it will work, right? And especially in the context of India, and you can invest some money outside and do, but how much money you can put outside, right? At least given whatever regulations we have, I don't think I can put large part of my or any investor's net worth outside, right? If you can't, then even if I get few percentage of my asset outside in different asset classes, it's not going to move the needle according to me.
Now there are opportunities through Gift City and all to invest
There
in
are some
global markets.
opportunities. So I think if somebody understands Bitcoin, or Bitcurrency, the cryptocurrency, I think they should do it. I have tried to, I still can't. And by the way, world is still divided. There are equally smart people who don't believe it, and there are equally smart people who completely believe in it. So the world is divided, and jury will be out. Only will know. The only thing is that I still don't know how a currency will work outside the domain of government control. Today, it is outside the domain of government control, right? I mean, no central bank can monitor that, control that, right? So you can't have taxes on that. You can't have, so unless it comes within, it essentially can challenge the power of the political power of the government, right? Which I don't know how it will sustain, how it will work. So look, I'm no expert. Jury is still out. We will know, but so hence at least I have kind of stayed away. But anybody who understands it,
Please go ahead.
go ahead. Who am I to preach? I may be equally wrong. Who knows?
Yeah,
I may
yeah.
be in a wrong camp as well.
No, fair enough. I mean, the Trump administration has a lot of people who are very pro Bitcoin, very pro crypto, and a lot is happening on that front. So let's see which way it goes. But getting back to what we understand best, which is the markets, right? So what's your best guess of how the markets will move from here? Because, like I said, 2-3 years, the market has done nothing. Earnings have picked up, but it's not great. Now we are seeing, large pockets come under pressure, whether it's IT because of AI disruption, whether it's, consumption has just been single digit in terms of growth. So what's your best guess of how the market would move this year?
No, I think this will. I personally think the market should do well. It should, in my opinion, give you at least 20 to 15% return, and mid and small cap can do better. For the simple reason, again, our earnings have picked up. Even if you don't see a re-rating, earnings have picked up, right? And I do believe that we will see, because in FI money coming back this year, it could be in whatever proportion. I mean, even if the selling stops and little bit more positive turns, it will happen. So I think that could give a little bit of re-rating chance. But even if, let's say, for that matter, that's not the case, even around 12 to 15% earning growth is quite doable as far as India incorporation concerned. And that much return we should make. If any macro environment turns out to be positive, we can make a very, we can add another 5-7%. But that's a thing which you can't predict, right? But 12 to 15% is doable environment according to me. And we are finding in a mid and small caps very, very interesting, compelling ideas. I can tell you, I mean, I have a lot of money and I can deploy a lot of money with confidence. Good companies, good visibility of growth, good ROE, reasonable valuation. So we can see a lot of companies today.
Like what? Like which sectors, which stocks?
We can see a lot of companies in pharma which are available at 20 in and around 20 times P, with 6 to 10% free cash flow yield.
CDMO companies.
Within CDMO and normal pharma also. CDMO is expensive, but even normal pharma company growth of 15 to 16%. Can they compound at 15 to 20%? Answer is yes. So you can find a lot of interesting space. With now consumer discretionary, I feel a lot of valuations have corrected. They will do well. Within BFSI space, quite a few opportunities are there. We've been quite positive in NBFC space. That's done well, and I think still ways to go. So banks are doing well. So you can find your own spots. You can find your own companies where you have comfort around potential. Now, can they disappoint in 1 or 2 quarters? Answer is yes. But will they disappoint you in 1 to 2 years? Probably not. Is the way we think, and that's the job of an asset manager or any investor, that assess risk reward of investing. And if your hypothesis turns out to be, will you make money? And if it doesn't turn out to be true, then you should not lose much money. I feel that's a favorable risk reward right now is there.
Are you concerned about what's happening in the IT sector? Globally with Anthropic, we saw, AI is completely taking over all these tasks, and IT companies are laying off people left, right, and center. TCS in the last 6 months has laid off 30,000 people. So, what happens to jobs? What happens to all these people in the sector? Where will they get hired? And are you concerned about the space itself as far as an investor is concerned?
So I think, the two things and this very, very interesting question you asked, right? Ashwin Vaishnav, I think in Davos, he made a very interesting statement about AI layer, right? And he said there are lots of layer, product layer, infrastructure layer, and the application layer, ROI. The biggest ROI of AI comes from the application layer. I see a lot of these people are creating products. But if you see in an enterprise context, who implements it? If in my company I want to, let's say, start implementing AI related whatever technologies have come, either to manage workflow or improve efficiency or reduce people or whatever, right? I need some company to implement that in my, first tell me what can be done and then implement in my company, right? So in the enterprise context, you will always need IT services companies, right, to deliver that. And that's the reason, if you see, a lot of companies are struggling on ROI on AI investments. Every company will tell you ROI on AI investment is hardly anything, because most people don't know. So I think Indian IT services has to migrate from the conventional application development, software development model. It's already been doing to, it happened to ERP, cloud migration, digitization, to also bring AI related technology. So IT services will do well. They may not need as many people to deliver that, but does not
So
mean that.
that's where the restructuring in jobs is
Correct. So
coming
you will
through.
need little bit more different capability. The people who are not able, or not trainable, who cannot they will have to go out of the system.
But we have been talking about this transition from conventional app development to AI related for years now, and IT companies have not been able to match up, right?
No. See, AI is a very recent development. It's not like last couple of years development. See, if you see, in every cycle, IT companies tend to Y2K. We were only with limited application, changing the software from 2000 Y2K perspective. From there we moved to ERP, then we moved to digitization, then cloud migration. So IT companies have from only body shopping to delivering solutions, building enterprise solutions. All those things, IT companies have gone long way from they were. In 2001, IT industry was $10 billion. We are today $200+ billion, right? So IT companies and some industries come long way in delivering good outcomes, right? I don't think it's going away anywhere. Question is, every time there's a cycle change happens, new companies come about. So for example, post Y2K, I think we saw in that cycle, Infosys, Wipro, Satyam got created, right? And after that, I think if you see 2000, post global financial crisis, 2008-9 cycle, when the new transition towards ERP, digitization, cloud migration happened, Persistence, Mindtrees of the world, HCL Techs of the world scaled up, and they became very big. Persistent from 2010 probably would be a 50x return story, by the way, right? So 40, 50x, whatever exactly, I don't remember. But so the point is, HCL Tech would be 10x. So every cycle, new companies come and scale up because they are able to adapt fast and do it. So I do believe in this cycle also, probably the large cap companies may not be able to. You are not found Wipro anywhere. Why? Because they did not adapt, right? Infosys, TCS has been okay, right? So you will find new companies which will adapt and deliver. And hence, that's the transition which will happen. Some of those companies who are not able to match the growth, Wipro is still around, by the way. They're still doing all right. They're still generating good amount of profits, right? But markets don't
But
invest
they've
in
not given anything to
valuation.
investors, na?
Correct. So valuation derating has happened, which is what can happen to the large IT companies. But the companies which are small, new companies will emerge in this space, which will become 20, 30, 40x.
Like
The
any examples?
real idea is, I would not want to name the companies, but thing is to identify those companies which are adapting themselves, to the, AI related implementations, AI related, they're adapting fast, and they will, come out very well. So IT services industry is not going anywhere. There will be internal shuffle, and companies who adapt fast, they will grow fast and they will make good money.
So you're saying these large IT companies currently, TCS, Infosys of the world, who have not been able to adapt, may not give great returns, but the space itself has a lot of promise because there are smaller companies that can adapt to the new technology.
Correct. And I'm not passing judgment on any particular name. I'm not saying it will not TCS, will not be Infosys. For all, they might be able to adapt. I don't know. I'm not currently it's larger the ship. It's very hard to maneuver, right? So it's very hard to maneuver. So I think, and larger the base, again very hard to kind of grow on that base, right? So hence the odds are not in your favor. And again, like I said, we play only on the risk reward. So if the odds are not in your favor, why would you place yourself there? You might as well place yourself where the odds are in favor, where you think that you can. I don't mind buying something expensive which can grow at 30% than buying something which will grow at 8%.
Yeah. I had a conversation once with a very large IT company who he made a very interesting statement. He said, changing something in a very large conglomerate is like, moving 100 elephants at once. You can't, because if you try, there'll be full chaos. And that's why a lot of these legacy businesses just stay where they are. If you look at even what's happening with the Tata Group, right, with some of their companies, for example, whether it's in the hotel space or whether the quality is not as good as maybe what it was 10 years ago, because it's very hard for these large conglomerates to completely overhaul. Like you said, smaller companies, it's much easier. Okay, got it. So that is in the technology space. But how are you positioned? I mean, in your funds, are you overweight on technology? Are you underweight? Are you more focused on mid and small cap technology names?
We are more focused on mid and small cap. We have one large cap only. Otherwise, we are mostly mid and small cap space. We are underweight. We are keep looking for ideas. It's not about actual sectoral. It's all bottom up. Which company can do well over 3-5 year period. So currently, we at an index weightage level we are underweight, but we keep looking for ideas in that space. Um, Other than that, I think we are, as a fund perspective, we are fairly large. You know that in healthcare space, pharma healthcare space, we've always been very skewed. We are very overweight on auto component because we can see a growth cycle. CV cycle is doing very well after long, right? I think we are kind of very well placed on that side. We kind of got lucky to start about few before the number started coming in, so we kind of got lucky to be in that. So that's where BFSI continues to be our large weight, specifically NBFC and some of the PSU banks. Yeah, so I think this is how broadly. Other than that, then we go stock specific. A few names in consumer durables we like, where we think the risk reward is favorable. Post GST cut, I think it can only do well over a couple of years. So that's how broadly we are kind of positioned. Yeah,
Okay.
I mean, textile looks very interesting post this. Because I
The
think
deal.
deal. I think because now you have pretty much good environment across the globe, and but it takes time to build capability. Growth might take time to come. To keep an eye on the sector. But yeah, I mean, I don't want to get euphoric about it and saying just jump, because growth will not come tomorrow. It will take structurally positive, but more from medium term to long term perspective, not anything immediate. So hence, you will get your moment to buy.
Okay, so that's on your sectoral view. But I want to come back to the overall view, right? Because it's very interesting. People who sit in India have a very different India view compared to people who sit outside. And you can see it in the numbers also. I mean, foreign investors have been selling India big time, buying other markets. Where do you think the gap lies? What is it that India needs to do to kind of fix the piece and, get foreign investors back?
So I think first of all, I think we must understand India is 80% of India flows are part of emerging market basket. India still has not reached an independent asset class as a so you don't kind of accept, I think, probably large funds like GIC, Norges, ADIA. These are the some fund which understand India very well, and hence they have a lot of India direct exposure, not only as a part of emerging market allocation, right? But in general, by and large, we are part of that. So whenever emerging market money comes in, we get flow, and if emerging market money goes out, we lose the flow. And large part of the flow which we have lost is because of that. Whenever Fed raises interest rate, emerging markets lose money. So did India, right? And last 1.5 years, we lost money because when earlier cycle, India was overweight, China was underweight. In from 2021 to 24, when emerging markets were losing money, India was overweight because India was doing very well. And 24 to 25, China was doing well, so money went from India to China, from overweight to underweight. So that was the only thing, right? Which by and large is done. Now there's a broader trend which is expected that emerging market will start receiving money as the Fed cuts rate and money starts moving out of US. If that happens, I think India will also receive money. Now, other thing, I think probably there's a lot of noise outside when you go and talk to in Western media. And if you see historically also, Western media has been biased towards India in terms of what they write. If you see fundamentally, India has repaired its economy beautifully. I think we have best banking system in the world. I don't think anywhere we can compare that kind of digitized, well capitalized, well capacitized banking system. Our fiscal deficit is one of the best managed. Our debt to GDP is one of the lowest. In fact, with FM again being more conservative around saying I will take it to 50%. So we have managed our financials very well. Our inflation management has been probably one of the best around the globe, right? Our leverage cycle has not even begun. Credit, we have not seen corporates leverage anything else coming about. So I think India has managed our current account deficit is not repair. Manufacturing is picking up. So we are on a very good structurally repaired. Now I think most of the foreign investors also, in my opinion, get trapped by the narrative. India is not good in AI. We will not good be in everything, right? India has to build its own capability based on its own. Now we can't suddenly say, we will adopt US's culture and we'll do what. I mean, but India has developed very large IT services, which has given employment to. I take a lot of pride in our IT sector, which has created so much of employment and forex reserve for us. Otherwise, we would be bankrupt as a country. We will be probably a basket case if there was no IT. So, in my opinion, we don't have to fancy. We should always look that how can we get more and more advanced in technology. There's no question on that. But every country has its own context. Today, there's a lot of narratives that India does not spend on R&D. Right? It's a very big narrative. Everywhere people talk. But I can see companies. People have started spending on R&D. People forget. People compare us with China. China's R&D spend in 2005-06 was 0.6% of GDP, which is India's today. Now, we can say China started journey in 89. We started very recently. So, we can't, so every nation has a journey to walk. And we are a democratic setup. They are very different setup. So, they can move things very fast. In our setup, we have to take care of public accountability. A lot of things we have to take care. You can't move just things at a pace which China probably can move. So in that context, I feel that, I can see companies are thinking very differently, global scale, investing. I'm not saying it's sufficient. It can be far more. And I think government is doing great job in terms of pushing, those initiatives, making sure what are we doing in semiconductors, addressing long-term, fault lines where we can, be found wanting or where we can have future fault lines. So I think a lot of work is happening. So I feel that moment people understand, this situation, they will start coming. For example, I'll tell you, you should study Japanese economic miracle. 1965 to 89, this period called Japanese economic miracle, right? 45, Japan was broken. 20 years, they took it to repair. But 65 to 89, Japan had a great time. They had a very similar they had broadly done 3-4 things. They imported a lot of technologies. They had a lot of savings. They improved the quality and quantity of labor. And they focused on manufacturing, right? But by the way, what started in 1965, foreigners started taking note of Japanese market only in late 70s, early 80s. Most of the US investors started coming to Japan only in 80s. And that created a big bubble. So I feel there will be a time. And earlier, Japan used to be part of Asia. So how much allocate you will do? And then they came out with the concept called Asia X Japan. Yes. So that they can allocate more coming to Japan. So I see a situation when there will be a time when as India gets noticed, as India progresses, because you cannot ignore consistent delivery over a long period of time. Because time and again we keep hearing noise, Modi ji will come or not, India has AI mistrade. I am not saying India is perfect, but India has progressed very well. India has delivered well.
Is it easier for you to say that India has progressed very well being at the top of the pyramid? Now I'm asking because if you look at the middle order, if you look at the middle class, the life is very different, right? Now jobs are an issue. There is overtaxation. There is high amount of service-led jobs. Manufacturing has slowed down significantly or has not picked up rather in a very big way. So is it easier for people in the 1% or 5% bracket to say and benefit from what's happening? Because the middle class is a category that is really struggling.
So see, this is a very sensitive subject and you can always look at glass half full and half empty. I have always believed that life is never perfect, right? Neither it is dystopia nor utopia. What we have to see, are we getting better than yesterday? In that context, if you see, are we creating more jobs than yesterday? Answer is yes. Look at the EPF number data month on month every year, last 10 years. It is only going up. Does it mean it is creating more jobs? Yes. Today, if you ask to any entrepreneur, what is the biggest challenge? Getting people. So what I'm trying to tell you is that we are growing month on month EPF number. So it's job creation only, right? I'm not saying everybody is employed, but at the same time, there are lots of people who are getting employed using, let's say today, how do you count the employment of gig workers? It's also employment, but it's not captured in the formal, which now they are trying to do. So whenever economy progresses, only then fruits can reach down to the lowest level of society. Secondly, good news about the current setup of India is, see, India has first time beautifully experimented in last 10 years that social welfare and development can coexist. They are not at odds with each other, right? I know a lot of people frown about on freebies and this and that, right? But think about it, they are also taking the benefit to the lowest level of the society. It is first, by the way, unprecedented in human history that India has lifted 250 million people out of poverty in last 10 years. Even China did only 150 million people. What I'm trying to tell you is that, so now, is that enough? Maybe not. But has that happened? Is there a positive delta towards that? Answer is yes. We had in this country, which were, if you go to UP and all, it was considered media dark area. There was no electricity, no power, nothing. Today, there are expressways on that. Now, people in those places are benefiting from that. They are getting connected to you and me. People will be watching this from there and investing to markets. So what I'm saying is that I always believe in looking at rate of change. Are we going better than yesterday? It will never be perfect. And that is the progress one has to see. Now, I can make a very pessimist argument also saying that, it's always the case. And I believe that whosoever it is, I think it is world will, and does not mean that you deny the problems, deny the need to do more. But at the same time, you have to acknowledge what is getting, otherwise, progress will never happen. There's no magic wand. Today also in China, a lot of problems are there. In US also, people are homeless. Largest high per capita income in the world, the superpower. How many homelesses we report, and we see people defecating on the streets in the cities of San Francisco. What is it? People are still living on food stamps and all. So I'm saying that we put up very crazily. But when it comes to India's context, we see it very differently. I'm not saying that there are no problems. So don't get me wrong. I'm just trying to show you the other side of it. A lot of people frown upon when it was announced that Arogya card, where anybody poorest of the poor can go and get treatment done for up to 5 lakhs rupees and all. For a concept, just understand what I'm trying to explain you. Let's say the lowest of the society gets access to the good health care. Time being, I forget who pays for it. Those many people, if they get access to the healthcare, aren't we lifting the national productivity? Aren't we improving the national productivity? Now, at a country level, we have to lift national productivity by getting them out of poverty trap, out of the healthcare trap. If I am not healthy, I will not be able to work properly. It's a vicious circle which these people go through, right? I see that positive development happening. Is it perfect? No. Is it working 100%? No. But is it working 60, 70%? It is a change. So I have always seen in my career that always focus on rate of change, good or bad, right? And even in investing, I see rate of change. I don't see one way. Rate of change is what determines outcome.
No, it's true. I mean, I am in your camp, to be honest, because we are all here. We all live in India. We earn in India. We invest in India. So we want India to grow. But these conversations have to happen, right? The discourse has to happen about what are the problems that India is facing, what are the challenges, and what could be the solutions. So that's where we are at. Fair enough. We're running out of time. So just a couple of quick questions for you. In terms of, there is a big narrative now, and I want to understand from your lens how one should look at it. That it's a larger topic. Of course, it's a topic that we could do for 1 hour, but very quickly, we'll start here. The American hegemony that we've had for the last, 50, 60 years, right? There is a narrative that's coming to an end. The dollar dominance is coming to an end, and the world order is changing, and the EU for the first time is taking a stance against America. America's bullying the allies. Do you see this happen in our lifetime, or is it just talk and one should not really put too much into it?
So I think it's again a very deep question, and very, we can have a long conversation. But short answer to that is, see, it is being questioned and challenged. Now, what will be the outcome, we'll only know in 10, 15 years. But if you see every 100, 120 years, 150 years, power has changed. from Dutch to ultimately we have seen many people to British to Greeks, then Dutch, and then British to Americans to every 10. But when power shift happens, it does not happen like overnight. You don't even realize. Just for example, when it moved from UK to US, it took 15 years, 20 years of continuous, and then suddenly one day, I mean, it automatically it's a switch. It's not a switch. It's a dial. You will never get an announcement today I am the superpower. It's a dial. Slowly power moves. So now right now the real game is between US and China. I mean and that's the reason all this chaos you are seeing in the world is happening, right? Now whether China will win or US will remain superpower, I think it's anybody's guess. Trust me, because see, one can make a lot of argument. US has its own problem, both economical problem, societal problem, political problem. So does China. Their banking system is struggling. Their political system is what it is. Now, suppose let's say tomorrow something happens on the political system. What happens? I don't know. So we don't know that, right? So that answer is not clear. One thing is very clear, that who has military power will remain superpower. Now, generally speaking, no transition happens without a very big military conflict. Generally speaking, I'm not saying it's true. And that's the reason we are seeing little bit military skirmishes, right? Big risk, which today, from our point of view, which I think we all should be aware, and I think probably will not have conventional warfares. I think this time around, probably warfares would be more like cyber, more trade is still okay. More, in my opinion, cyber, more like biological weapons, kind of, those kind of, and they are very, very extreme, and still the jury is out whether COVID was a war act or a natural thing. We don't know. But I'm saying, now think about it. One that act, assuming that for time being that it was a planned one, think what can happen to the world. So I think that, and COVID has reset the world in that sense, right? So think about it. Even so, those kind of resets will happen, and those resets will be not, in my opinion, conventional way. They could be either, cyber. Today we have not seen a major cyber thing in the world,
but people talk about it.
But it could happen, and still being planned. We don't know how. Now, could that be a next big reset for the world? Possibly, yes. I don't know. So those are the things and you can't do anything about it, right? So I think there will be something very big to reset that power. Now, what that reset, is it military? Is it biological war, bio war, or a cyber war? Only time will say, or AI-led war. Who knows? Space war. Who knows? Who knows? Who knows? So I think we will only know in time. But the thing is that reset, I feel in lifetime to should happen, whether whichever way, but in next 10 years, I don't know.
You never know. I mean, in last 1 year only so much has happened.
You never know.
Every day there's a new headline.
Correct. It's a futile. I mean, you cannot predict these things.
It's a futile
exercise. You cannot. You have to just. So I always say that, see, what is not in your control, you just see what is in your control and work on it and manage your risk at your life. No, never take risks which you can't handle. I am of the opinion, manage your risk in investing, right? In life, whatever you can do. Certain things are outside our control. I mean, how do I know if tomorrow I'll be alive or not, right? We all seen how life is fragile through a recent news flow, you see, right? I mean, Siddharth, a good friend, suddenly, now we plan for 100 years, plan for 10 years. We don't know. So I'm saying, why to worry too much about that? Enjoy life and, say all is well.
Yeah. Actually, with Siddharth, we all miss him. He was a star in his own right, and a star gone too soon. So, yeah.
I mean, that's what I'm saying. So, hence, there's not too... One thing this teaches us is that, too much worrying about future is also not great. See what you can do today, what is in your hand.
Enjoy the present moment.
And what you do, what in your hand, right?
Yeah. And I enjoyed this conversation with you. We've run out of time, but not out of questions as always. So thank you so much, Vikas.
Always good, great chatting with you. You bring out the best.
Thank you so much.